The Indian equity markets have been quite resilient in the recent past, despite concerns such as slowing earnings growth trajectory, likely adverse impact of weak monsoon, and also global issues such as possible exit of Greece from euro area and also slowing Chinese growth. Despite these concerns, overall markets have fared quite okay, although there were intermittent bouts of volatility during the quarter. This overall performance has been broadly in line with our expectations of a moderate year in terms of equity returns for 2015. Some of the concerns that I mentioned earlier continue to bother market participants even today. For example, on the earnings growth front, while there is going to be some recovery in the first quarter of this financial year, it's unlikely to be in line with the overall earnings expectations that are prevailing in the market. Overall, while the earnings growth for financial 16 are about 16 to 18% year-on-year growth, we believe that overall we may end up with maybe 10 to 12% kind of earnings growth. Secondly, on monsoon, while the monsoon started quite okay and there was above average rainfall for some time, we have recently encountered dry spell across India. So it remains to be seen whether overall monsoons will be affecting our economic growth, especially the rural income. We need to get a better hang of this, and this will be available only towards end of August or maybe by September. And also on the global issues such as Greece or China, there seems to be no immediate solution in sight, and these issues will continue to bother market participants. Added to that, you also have monsoon session of Parliament starting from 3rd week of July, where some of the key bills will be taken up for legislation, and depending on the direction of some of these key issues, the market will find its direction. The volatility that may be there in the short term could be an opportunity for investors to increase equity allocation. While financial year 16 could be a subdued year in terms of earnings growth, we believe that from 17 onwards, the earnings growth momentum will really pick up. We believe that this is going to be aided by supportive government policies, lower interest rates, and also economic recovery that's likely to happen. Overall, we believe that anybody who is investing in the next 6 months will actually gain from the wealth creation from financial year 17 and beyond. So it's a right opportunity to use this volatility and get invested in equity markets. From our product basket, we believe that for conservative investors, Kotak 50 could be an option. For all those investors who are regularly investing in equities and want a diversified exposure, either Kotak Select Focus or Kotak Opportunities could be good options. And for those aggressive investors who are looking for mid-cap allocation, Kotak Emerging Equity is an option.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.